Hello, good morning and welcome to the Al-Attiyah Foundation's booth here at COP28 in Dubai. Yesterday was a day of rest. We're back at it now. Early morning here around 10 a.m. and lots of people getting into the venue once again here in the Blue Zone. And we're starting our panels again. Today we're looking at green financing. My name is Naweed Jabakil. I'm a director at APCO Worldwide. I'm very happy to be back here for the second week of COP28. Now, we've got plenty to dive into today, looking at green financing, and this edition, this panel brought to you in cooperation with the Qatar Free Zone Authority, as well as the Al-Attiyah Foundation for Sustainable Energy. We've got a great panel to dive into it. Then I'll start introducing them. From the furthest right is Abdullah Yusuf Al-Abdullah, the Director of Regulations, Development and Compliance at Qatar Free Zone. Thanks for being here, Abdullah. We've also got Ahmed Al-Idrisi, an advisor at the Qatar Free Zone, next to him. Simon Henry, a familiar face for many at the foundation. He's the Director of Carbon Markets Development at IETA, the International Emissions Trading Association. And Diarko Mahmalbaf, the Director of ESG Solutions at HSBC in the Middle East and North Africa. So plenty to discuss then. What we've seen, gentlemen, this time round is quite a lot of focus on financing. This was something that the COP28 President Sultan Al Jaber said so before this event started, that he wanted to try and engage the private sector, that the financial sector needed to step up a bit more and look at the role they can play in making sure money goes into fighting climate change to try and move towards those net zero targets. Let me start with you then, Diarko. Given the pledges we've seen here, when it comes to green finance, what do you think is key to ensure that more money goes into fighting climate change?
Is it working now? Yeah.
Yep.
I mean, look, there's been big pledges made at COP28. There's been a $30 billion pledge made by the UAE. There's a lot of finance commitments being made around loss and damage by governments, and I think it's the question is, what are governments going to do? What are multilateral development banks and other concessionary finance organizations going to do for climate? And then what is the private sector going to do? And that's both corporates as well as banks and investors. And I guess what banks are doing right now, and I can speak on behalf of HSBC and the investor class, big commitments are being made on, of course, decarbonizing their portfolios, so financed emissions and invested emissions. But on the other side, major commitments are being made around green finance and sustainable finance. So HSBC has a 750 billion to 1 trillion sustainable and transition finance target by 2030. None of this is sufficient. A lot will depend on how governments support in terms of regulations to drive the investments required, because banks and investors will always look at their return, no matter what if a project is green or not green. So risk profiles, return profiles are essential, and to really mobilize the financing required for the transition. I think there's a big thing to play by regulators to make these kind of projects financially viable for investment. Because once they are, there'll be a lot of backing, of course, by investors and banks.
Thank you. And gentlemen, what is the Qatar Free Zone doing, do you think, to try and promote green finance? We just heard there from a banking perspective that it's up to governments to try and play a role here, up to institutions within a country as well. Just tell us a bit about what Qatar Free Zone is doing in this space.
Thank you very much, Naweed, for this question. And from Qatar Free Zone perspective, because we are, if we classify ourselves, we are in the middle between the private and the public. So we are trying. Qatar Free Zone has been established to be a catalyst into these areas of green finance. So we are looking at ourselves as enablers for green finance. And what we have done up to now is we come up with our policies that will support and enable green financing within the spectrum of the investments that are coming to Qatar Free Zone. Part of what we do as well to ensure that we are adopting these sustainable green finance as well is try to avail the infrastructure that's needed for those investors to come to invest in green, if we may call it. So we have built all our infrastructure as green infrastructure, or our buildings are rated as green buildings that Qatar Free Zone has invested in. And we are pushing forward, and even we went into the extent of coming up with standards to incentivize companies or investors who are interested in investing into green finance. We are working as well into the front of bringing financial institutions, because we know that they play a big role into this. So now we are engaging with those financial institutions to ensure that they are part of what we do, and to enable as well investors who are interested into this scheme of sustainable green finance to have access to green fund as well. So this is basically what we are trying to do as Qatar Free Zone, and maybe my colleague Abdullah can add into it if. Yeah, okay, so.
And looking at one thing that Ahmed, thank you, touched upon there, Simon, he spoke about this relationship between the public and the private sector. How do you think, given the pledges being made here and the amounts we're hearing about, how can public money be used to try and encourage the private sector to get more involved when it comes to green finance?
Thanks, Naweed. Yeah, so I think, well, when you look at the financing requirements for either adapting or mitigating to climate change, the volumes of finance are enormous, and that's always going to be a challenge for public finance. There's always pressure on governments for how they spend their money, and climate change is just one of many requirements that are placed on public finance. So the challenge then is, how do you use public finance to incentivize, higher levels of private finance being deployed to this challenge? So I think, public finance has a very important role to play, mainly in de-risking private sector investments, making it easier for the private sector to invest at a lower risk, with a more guaranteed rate of return, with sort of more certainty over the terms of the investment. And we see this in carbon markets. We've also seen this in other sectors, in renewables. I work for Al-Attiyah, and my focus is on carbon markets. But before Al-Attiyah, I did a lot of work in power sector, and we've seen, especially in Europe, we've seen a transformation of the power sector in Europe, largely supported through subsidies for renewables, government subsidies. But it has meant that private sector companies have been able to invest in wind and solar at scale because public money has been used to underwrite a lot of these investments, de-risk them. And we now have a very sort of sustainable industry for renewables around the world, where a lot of renewables are now investable without any subsidy at scale, largely because public finance has been there for the last 20 years to de-risk these investments. And I think that's, that sort of model is a very good approach for other decarbonization, other abatement and adaptation investments that we need to see. So when we see these pledges for public finance, loss and damage, the Green Climate Fund, other climate funds, I think a big focus of how that money is deployed should be about crowding in, 2, 3, 4, 5 times the amount in private finance from the private sector. So de-risking is a real key focus or key challenge that these funds should address.
And we'll touch upon risk management in a bit once we delve into it. I just, looking at the bigger picture then here, Simon, do you think that there's a gear shift or a change at this COP compared to others when it comes to the financing, looking at the pledges being made here and looking at decarbonizing? Are we really at a turning point here?
That's a very good question. It's certainly attracted the headlines at this COP, I think, because the Loss and Damage Fund was operationalized on the first day. A lot of work leading up to this COP to get to that point, and it was, quite a deliberate step to give the COP and the negotiations a real emphasis from the word go. I think the loss and damage fund has now raised 700 million in the last few days, which is a lot of money, and I'm sure will be welcome, but it's also short of where it needs to be when you look at analysis of the levels of finance that are needed for adaptation, to cope with the damages that are coming or have been incurred from climate change. I think it's also worth looking into the pledges in a bit more detail to understand if they are new, if that is new money, or if it is previously committed money that has been reclassified. I think in some instances, some of those pledges, were already on the table, but they've been categorized as being donated to the loss and damage fund. So sometimes, the nuance or the detail is below the surface. But finance at every COP is important because it sort of lubricates the wheels of the negotiations. It helps move the negotiations for all other aspects of the COP. It helps move them along if finance is on the table. So this one has certainly attracted the headlines, but finance is always a key aspect of every COP.
And Diago, to come back then, we've set a bit of a picture looking at the overview of green finance and this COP in particular. Let's delve into the Middle East a bit. Obviously, a key focus for lots of the foundation's members as well as viewers watching. How do you see the evolution of green finance impacting this region in particular?
In terms of the evolution, I think what we've seen in the Middle East is it wasn't historically, there with where sustainable finance was in the European Union, but I think the region's very dynamic and it's progressed significantly. The first green bond done in the region was with HSBC structured it for National Bank of Abu Dhabi, which is now called Fab Bank. That was around 2016-17. That was the first green issuance for the Middle East and North Africa. Now we're seeing, green finance in terms of sustainability-linked loans, sustainability-linked bonds, green bonds, green loans become a matter of routine for sovereign wealth funds, corporates, and we're structuring multiples throughout the year. So the region has caught up very quickly, and I think now with the evolution of sustainable finances, we again need to look to the European Union and how that's impacting this region. You have, for instance, the EU taxonomy coming out to define what is green and what isn't green according to the EU regulations. That's impacting this region because now issuers need to think about, if you're issuing a green bond, does your use of proceeds align with what the EU taxonomy is saying? Because that's important for European investors, at least. Not so much for other investors yet, but other regions are developing their own taxonomies. UK, Canada, Japan, Australia. So all these taxonomies will impact this region. This region will need to think about how to develop its own sustainable finance taxonomy. And I think the region will move fast. We just saw an announcement at COP that Abu Dhabi Global Markets is setting up a global center for sustainable finance. And part of their remit is to look at what they need to do in terms of frameworks for the global south to ensure that the kind of investor expectations are being met by the global south for developing and emerging markets, to kind of develop these frameworks to attract the investment required from places like Europe.
And it's something that we're witnessing in Qatar as well, quite strongly, gentlemen. Looking at the free zone, you have other partners in Qatar, the likes of QNB doing a lot, Qatar National Bank, in the space of whether it comes to green finances or bonds. What do you think are the main challenges and opportunities? We've just heard about some of the international countries racing ahead when it comes to trying to regulate this and take the lead. When it comes to Qatar then and the free zone, what sort of challenges and opportunities are you seeing in promoting green finance within your area?
Well, one of the main challenges we see is, balancing rapid economic growth along with the revenue, I think, from businesses, and let's say conventional or past time, businesses are more focused on revenue generation, whereby now with the, the climate change and the climate change impact, and with the COP, there has been a lot of, in the world, more focused on the climate. So now businesses need to think about climate as well as making money. So from a free zones perspective, we are, working strongly on, creating policies, procedures, regulations that will be in line, with how to tackle climate change, as well as, to allow the investors to also, create the revenue, but also taking care into account the environment. Maybe Ahmed would like to elaborate more on this.
Okay, thank you, Nawid, for the question. And I think, yes, there are challenges there, definitely. And this is one of the reasons why we are trying to stretch out to establish partnership with financial institutions, as mentioned, like HSBC or QNB and so forth, because we believe that bringing those kind of financial institutions on board with us, that will help a lot into kind of creating opportunities for the investors, who would like to go into this kind of green spectrum, if we may say. There are lots of areas like, as Qatar Free Zone, we are the regulator of the free zone, but the challenge is not like we can control whatever it's happening within our boundaries. But the problem is that when you go out, because funds are not coming only from Qatar Free Zone. So we have investors coming from outside. They need funds. They need somebody to support them. And so if the whole kind of policy for the state and the global is not in line with whatsoever we are thinking of, then that's another kind of things. One of the other challenges that we are facing is the awareness, because these kind of green bonds or green loans, it's kind of quite new into this area. So we are facing big kind of challenges in the understanding, in the awareness of people. Okay, what do we mean by these? How can we take these kind of things forward and adopt this kind of approaches, for the green finance? I believe that one of the big challenges as well is the openness of the financial institutions towards supporting green, because I believe that this is one of the issues that, for a reason or another, they look at these areas as like a high risk areas or so. So there is no openness or willingness to go into supporting of green projects or whatsoever, specifically to mention SMEs. For example, like if we do have lots of SMEs that are approaching us in Qatar Free Zone, and they would like to have access to green fund, but banks, financial institutions, they have this kind of they don't want to go into that because of risk that they are seeing and so forth. Another challenge is that we do have lots of startups that they are looking into having access to fund, but actually they are not finding these kind of funds available, so that they can make use of and so the funds that has been allocated into R&D in these areas as well I still see it as limited. It's not like up to our aspirations, if we may say. So R&D, we need more fund into R&D, into the innovation of different technologies in green. So these are like the general kind of areas that you can see as challenges from kind of helicopter view, if we may say.
Yeah, and some important points raised there, Simon. Just to bring one of them to you then, looking at the wider system around the world, where do you think things like the cap and trade system and the bigger instruments, not specifically looking at countries, but more about how governments are considering this on a multinational scale, where do they fit in when it comes to raising green finance to tackle climate change?
Sure. So carbon markets, one of the benefits of carbon markets, which is, my focus at Al-Attiyah, is that carbon markets, put a price on emissions. They can put a value on removals through nature or through technology. And by creating a market for either these reductions or these removals, you can bring the private sector in. You can create demand for reductions, removals through a carbon market. So that sort of touches on my earlier point, I think, about bringing private finance in, given that public finance, is not going to be sufficient on its own. And I mean, certainly we have a number of cap and trade systems around the world, Europe, with the biggest, but also in California and Korea, and we're seeing lots of developments, Brazil, China, with their cap and trade markets, well, either coming or just emerging. And certainly in Europe, we're seeing the EU ETS, the European Union Emissions Trading System, as being a huge generator of finance for climate action, which is a relatively recent development, I would say. The EU ETS has been around for a number of years now, since 2005. And when it first started, most of the units, most of the allowances in the market, and these are units that companies have to submit at the end of each year. For every ton they emit, they have to submit a unit to comply with the rules. When this market first started, most of these units were given away for free. They were freely allocated, as we call it. So that doesn't raise any finance. But since 2013, we've seen the rules of the system changed in 2013, so that we saw the introduction of auctioning. So instead of giving away these allowances for free, member states would auction allowances. Companies could buy them at auction. And we've seen an increase in the volume of units being sold at auction. And particularly in the last few years, we've seen an increase in the price. So what we now have is millions of allowances are auctioned every week. There's nearly an auction every day in the European Union. Prices somewhere between 70 euros and 100 euros a ton we've seen this year. And that raises huge amounts of money, about 50 billion last year on its own. And that money most of that money goes back to the member states in the European Union, and under the rules, they have to spend that on climate action. Some of it also goes into central funds that the European Union manages. So there's an innovation fund that puts money towards innovative technology for reducing emissions. Some of it goes towards modernization of things like power grids. And over time, under the rules of the system, we're going to see a big increase in the volume of units that are auctioned. We expect the price to continue to go up, so more and more money will be raised through those mechanisms. And then in 2027, we're seeing another market will start in the EU of similar size to the main market that will cover emissions from road transport and from buildings. And that will also, that's a pure auctioning market. So that's going to raise huge amounts of finance as well. So the estimations are something like 400 billion euros between now and the end of the decade, just coming from these mechanisms. And that money has to go back towards climate action. And I think that's a great example of the polluter pays principle. You are putting a price on emissions. It is raising large amounts of finance. That money is going back into climate action. So it's either reducing the cost of future abatement, or it's helping to mitigate the price impact on consumers. So it helps to keep, energy bills down for consumers, or keep petrol prices down for drivers. So you're sort of mitigating the impact, which all eases the transition, speeds up the transition, makes it more politically acceptable. So I think that mechanism is very effective, and it's a key feature of markets, and something that we are, it's helping to promote markets with other countries. So as I say, Brazil is working towards a compliance ETS at the moment that will look very similar to the EU. China has an ETS that is slowly ramping up. India looking at one. Indonesia has a very new market for the power sector. So these mechanisms are they have multiple benefits, both for governments and for consumers, the private sector.
And they're growing, but relatively nascent then on the international stage, or perhaps in terms of the financial institutions that we know, and the sorts of products that we see when we go to a bank. Say, for example, one thing you mentioned, Jaco, which resonated, is that banks and investors will always look at returns, and perhaps many will say rightly so. How do you then manage risk, which is a key thing for the financial sector when products like these trading systems or anything related to green finance is still so relatively new? How do you reassure customers that their money will be safe?
So very good question. And risk is a big part of course, what banks do. I think banks are risk stewards of people's deposits. And investors are also risk stewards of people's investments. So from HSBC's perspective, being both a bank and with an asset management arm, so being an investor as well, there's, I guess, the primary focus of our work is managing this risk. And, we did get a point around lack of bank support for SMEs, especially in the green SMEs and sustainable smaller companies. That is true. Banks have always had a risk question around startups and smaller companies. Whether it's green, brown, black, doesn't matter what the color is. That said, HSBC this year, we bought Silicon Valley Bank. So now we call it HSBC Innovation Banking, which is focused towards the kind of startups. And this year we pledged $1 billion in specific financing and support for green startups. But then there's a bigger aspect of this ESG and green risk for us, which is actually in the sustainable finance space. There's a whole risk element of should we finance a company or not, but then there's a whole question of what are we saying is green or sustainable, and really is it? And that's a big risk for both the banking side and the investor side, and that's particularly around greenwashing. So how do we, we've got a 1 trillion sustainable finance target. How do we ensure that this is actually the financing is going towards green projects? We have, a lot of internal processes. We have committees across the regions and globally, whether it's you're structuring a green loan or a green bond or a sustainability linked financing. We have committees to review these to ensure that they're meeting market expectations and, for instance, ICMA standards or LMA standards on green financing. On the investment side, we have to make sure that, any ESG fund that's structured by HSBC Asset Management actually meets the definitions of sustainable investments. We now have, of course, European Union regulations on it under the SFDR, the Sustainable Finance Disclosure Regulations, but other regions don't have this type of regulation. So what is an ESG fund if it's structured in, for instance, China or Australia? And we have seen, we had Deutsche Bank's asset management arm being raided by police last year. Another bank in the US was under investigation of SEC. Some pension funds in Australia, not pension funds, some asset management firms in Australia have been, under scrutiny for funds they've created that are called ESG, but they're not. So the risk comes from both sides, whether you're looking at whether to invest or finance a company. And that is really based on the risk profiles of the company. Then there's a whole risk element of, are we greenwashing? Are we creating the green impact? And there's increasing regulations on that, but with lack of regulations, a lot of banks are struggling to realize, how do you manage this? Especially when the ESG technical expertise is missing from a lot of financial institutions. A lot of them are former bankers who have taken on an ESG hat or role without the deep insights into what is green or not.
And I know from the conversations that we've had in the past, gentlemen, that for the QFZ or Qatar Free Zone, ESG has been something that you've tried to take the lead on for quite a while. If those international standards or mechanisms don't exist for measurement, how does an organization like QFZ look internally to try and ensure its practices are sustainable?
Thank you very much, Naweed. And just following what has been mentioned by my colleague here, Diego, this is a very, very important area that we are looking at. We're looking at it from not only from the perspective of adopting an ESG framework or a scheme that will be implemented by Qatar Free Zone, but we are looking at it from the transparency kind of point of view. So what we have done actually, because we know that, and we have had experience whereby investors are approaching us in Qatar Free Zone, and then they ask this question that, do you have an ESG framework in place or no? And if the answer is no, they said, sorry, we don't want to put our money there. So this is one of the challenges that we used to have in the past, and that's why we have moved into adopting an ESG framework now. And I believe that we consider ourselves as an organization that we might lead into this ESG scheme in the state of Qatar in the future. So ESG is so important, it's paramount for us in Qatar Free Zone. We have already start building the system, and we are building a system in a way that it will enable compliance with not only one international framework, but with multiple kind of frameworks, because we do have investors coming from different kind of geographical setups. So we have Europeans, we have Americans, we have all those kind of investors that are coming to us. So we would like to establish a system that will incorporate all the requirements. So whoever is coming to Qatar Free Zone, establishing themselves there with the existing kind of framework that we are establishing, then they can easily go and say that, hey, okay, you know what, we have a very good system here and we are complying to that system. The way that we are looking at it as well is not only disclosing on the ESG from the Free Zone's perspective as a regulator, but we are looking at it from the disclosure for all, inclusive of our investors as well. So that will have the kind of the holistic picture of the whole Free Zone, not only Free Zone as an authority or as a regulator for the Free Zones. So this is an area that is kind of taking a priority for us now, and that's why we are bringing even partners into that, you know, so that they can share their experiences into this scheme, like Al-Attiyah Foundation, HSBC, and so forth.
And inclusivity is a key thing and a key feature of this COP as well, Simon. I mean, major fund managers, the likes of BlackRock, may have taken an early start on ESG and green financing. How do we ensure it's not something that is limited to just perhaps the rich and wealthy who can make good returns, but it's something that benefits all people around the world, or is accessible to people worldwide? Or is it simply a matter of, if the planet gets better and people make more money, then everybody wins?
That's a good question. I mean, I suppose when it comes to climate change, it's a truly global challenge, probably one of the few truly global challenges that humanity faces. And, you know, the atmosphere doesn't differentiate between where carbon is emitted or where carbon is removed or reduced. So, yeah, in some respects, I mean, that's why, you know, carbon markets are quite powerful, because you can be sensible, or you can be efficient. That's a better phrase. You can be efficient in how you deploy your money, because you can, you can deploy money into places where the cost of reducing emissions are lowest and have, you know, the maximum impact. I mean, that's what carbon markets are all about, identifying least cost abatement in that sense. But yeah, as your question, Naweed, this is everyone will suffer the impacts of climate change to some extent, you know, and probably lower income countries, or definitely lower income countries and populations will suffer the most. So there is an onus. I mean, that's where the loss and damage fund, you know, becomes important, because it's about supporting low income countries in adapting to climate change and the impacts that it has. And then there's also this, you know, a lot of countries will have significant challenges in reducing emissions. So there's, you know, there is a role for higher income countries in supporting low income countries in their transitions. We've seen since the Glasgow COP in 2021, this new phrase emerged, just energy transition partnerships, where South Africa was the first one to sign one of these deals at Glasgow, but we've seen Indonesia and Vietnam also, and other countries engage in these, which are, I mean, I suppose they're a bit like mini versions of things like the Loss and Damage Fund or the Green Climate Fund, where countries like the US, the European Union, the UK, Australia are putting money into partnerships with specific countries to help them in their transition, specifically away from coal. So South Africa, Indonesia, huge coal countries, and their whole, you know, a lot of their economy is based around the coal industry. It's, you know, that's the main source of power, and power supports everything. Electricity generation supports everything in their economy, and it supports huge amounts of domestic jobs. So I think there's a recognition that, you know, these countries need to move away from coal, but that's a huge challenge, both in terms of where does other sources of electricity come from, and then how do you support those people who are employed in that industry? If you're trying to shut down essentially that industry, how do you do that without just making a whole bunch of people redundant? So these just energy transition partnerships, this is a new sort of mechanism or development that we've seen, which are really focused on the coal transition in those highly dependent coal countries. It's something we will see more of, I suspect. But, you know, these are also pretty challenging tasks to transition whole sectors of the economy, whole methods of power generation into new ways. So, and the finance will always be there'll always be pressure. There will never be enough money for some of these, I suspect. So, these will be ongoing conversations at future COPs.
And Diaka, looking at how consumers or businesses, individuals may be impacted by this, innovation is going to be key when it comes to how some of these products and services, or the mega financing that's being announced, whether that's through a green bond or whether it's some of the fund announcements we're seeing here at an event like COP, how they trickle down. Banks need to be, and financial institutions need to be a bit innovative when it comes to the types of products and services. What are you guys doing in that area as an institution?
I mean, you're right. Banks do need to innovate, and I think they have been. So, I mean, again, when you talk about the public money that needs to go into the transition or the regulations, that has its own part to play. But then the question is, what should banks do? And, you know, everything from if you think about the green loans and green bonds, they actually haven't been around for that long in the history of banking. It's only been in the last 10, 15 years. In 2017, the world's first sustainability-linked loan was structured, where you tie companies' ESG targets to the pricing on the loan or bond. So that was a banking innovation. Then you had transition bonds come out from 2020. So that was looking at not projects that are green, but for certain sectors, it's very hard to clarify what is green. So for instance, for aviation sector, we don't have green airplanes right now, but what we do have is a clear path to transition by investing in sustainable aviation fuel, as well as the most efficient aircraft. So essentially ICMA, the International Capital Markets Association, with all the banks, including HSBC, came up with a transition bonds principles. And the first transition and sustainability linked bond ever done was actually in the Middle East. We structured it for Etihad Airways. HSBC was on that. It was both it was a sukuk, and it was a transition sukuk. So the financing had to be used for transition activities, which meant, you know, most efficient aircraft and sustainable aviation fuels and research. And then the actual sukuk, it was a sustainability linked sukuk. So essentially the pricing was linked to Etihad's ambitious decarbonization metrics. So essentially the carbon emissions per passenger, kind of complicated formula like that. And if they didn't meet their decarbonization targets, they would be penalized by having to spend a certain amount on buying carbon offsets in the carbon markets. Now, sustainability-linked bonds have really increased globally. We're seeing, you know, HSBC was part of the structuring, for instance, Uruguay's sovereign-level sustainability-linked bond framework. And again, so even at the government level, we created KPIs around Uruguay reducing its carbon emissions along with its nationally determined contributions under the Paris Agreement. But there was another KPI on actually increasing native forest land over time. So essentially, if Uruguay meets, and the targets are set at 2025, if they meet their targets on both their NDCs as well as forests, if they meet it at a base level, there will be no change in pricing. If they do worse than expected, there'll be a step up pricing on the bond. But if they exceed their kind of expected targets, they will get a pricing reduction. And so we've done this at the sovereign level, but we also do this at the corporate level. We structure this for other organizations, companies, banks, and I think banks are constantly looking to how to create these financial structures, whether it's with some sticks or carrot approaches to push the agenda forward. But at the end of the day, everything comes down to whether companies themselves want to do something. They need, because we can provide the financing, but it really comes down to companies deciding we need to transition, we need to set these targets for ourselves, we need to invest in green. Like how we heard that, you're building green buildings, we can structure that as a green loan, we can issue a bond out of the back of it to refinance as a green bond. But if they're not building if they're not building their buildings along with green buildings credentials, then we would not be able to finance it and call it green.
It's perhaps a good way to try and move towards the end of this discussion, gentlemen. And so we've heard there that the innovations happening, this convergence of different products and services, whether that's looking at how green finance is merged with Islamic finance in some instances. We heard there about sukuks and Sharia compliant bonds and how they can be green as well. We've also heard about the major announcements from an international perspective. So you've got the big layer, you've got the services. It's down to individuals and companies was something Diaco said. Tell us then as a final word, QFZ's vision for the future of green finance. How do you plan to achieve your goals around ESG, and where do you see this transition moving?
Thank you very much. And I like this carrot policy that are coming from the financial institutions.
Rather than the stick, which many people find when they get their bills.
So we definitely encourage this kind of approach to be adopted, whenever it comes to investment within the free zones. And so transition wise, we are there, and as some of you may know, that even one of the areas that we are kind of prioritizing is the electrification scheme within the free zone. So we are moving towards supporting electrification, and one of the investors that are establishing themselves within the free zone is one of the major EV manufacturer in China, and they are the ones who supplied the local market for the public transport buses in Qatar. So this is an area that we are prioritizing. We are moving more into green. We have established our circular economy standards very recent. So we want to make sure that we are closing the loop when it comes to waste and this kind of issues. So generally, in the future, we are thinking of more kind of collaboration with financial institutions, definitely. Adoption of the ESG framework, as I said, that will be a priority for us starting from 2024. And then issues that are related to carbon trading as well. This is in our agenda that we are focusing more into cutting and adopting cleaner technologies, but at the end of the day, all the remaining kind of emissions should be offset, maybe using carbon credits and so forth. So this is like our plan. We are encouraging SMEs and startups as well, because we have something called Business Innovation Park, whereby we are trying to attract as much as possible into the innovation from the SMEs and the startups. We have students from universities coming and establishing their startups within the free zone, which is something I believe that is very kind of blessing. And this is our kind of future plans when it comes to that. So Abdullah, if you want to add anything.
Also, regards to the ESG framework, as everybody was discussing, it's very important for us as the free zone. As we are attracting FDIs, which are foreign direct investments, and most of these investors that come to the free zone from international presence, they have ESG requirements, and without this framework, it's very hard for these companies to come and invest in the free zone. So we are working very hard in the future to get this ESG framework up and running, so we can attract these type of investors that are more focused on their ESG framework.
Excellent. Thank you. And I think that wraps it up for today's panel. But it's been fantastic to have the views of an institution like the Qatar Free Zone, as well as an international perspective from AITA, and then also the financial perspective from HSBC, of course, as we delved into green sustainable finance. Plenty of optimism then, some challenges and hurdles ahead. But on the whole, I think some of the announcements being made here at COP28 in Dubai, the expectation at least is that that will start to trickle down, and this does become something that's more normal for businesses and individuals around the world. And of course, while doing so, helps drive forward sustainability and those net zero targets as well. A quick thank you again to my four panelists: Abdullah Yusuf Al Abdullah, the Director of Regulations, Development and Compliance at Qatar Free Zone. Next to him, Ahmed Al Idrisi, an advisor at the Free Zone. Simon Hendry, Director of Carbon Market Development at AITA, and Diaco Malbaf, the Director of ESG Solutions at HSBC. Thank you to Qatar Free Zone for cooperating with the introduction of this panel to you. We will be back tomorrow as well. I'll be here as we delve into natural gas, a key topic here at COP28, and of course for many of our viewers, and the state of Qatar as well. Thank you for watching. Goodbye. Thank you, Jen. Good, good. Yeah, I should hope so.